So in today's video, we're going to cover two things. Number one, we're going to cover a concept that actually has a 79% success rate. Okay. And number two, I'm going to cover a Euro trade that I actually took last week. So it's the first trade I took in February. It's a 3R trade or 2.8R. I actually called this inside of my Telegram group, which is a free group you can join. I send my outlooks in there weekly as well. So you can actually go ahead, join that Telegram. It'll be the first link in the description. Like I said, I send content there every week, and you'll be able to see me call this trade, or sort of just give you the framework behind what I was looking for, and then you'll also be able to see like the execution screenshot and stuff like that if you're interested in that. Okay, so without further ado, let's just jump into the analysis and what I was anticipating, and then I'll break down the concept as we go along. So if you actually watched my previous weekly outlook, you would have known that I was looking for bullishness. Okay, I actually wanted to see price go ahead, push away from this FEG and continue higher. Okay, now well, obviously I'll explain how I came to the conclusion and how I sort of ended up switching bias mid week or after CPI. The first thing I want to mark on, right, is previous month's low and previous month's high. Now this is actually the concept that I was referring to that has a 79% success rate, right? Now you probably have heard of the concept before and you already know like it makes sense, etc. However, I'm going to show you a way in which you can actually go ahead, prove to yourself that this concept has a 79% success rate or somewhere within that area. And what you'll notice is by doing this practice, it actually gives you so much confidence behind this concept, right? So for example, me just telling you like, oh, this strategy, or not this strategy, but this concept has X percentage behind it. When you actually go ahead and do the study for yourself, you'll notice how much confidence you gain by, again, doing the practice and then seeing these results for yourself, okay? So what I basically did was I looked over 100 examples, right? I just did the last 100 weekly candles. This works for previous daily highs. It works for really any candle, any previous candle, high or low. I actually have a video that talked about this called what's the video? It's the easiest daily bias method in the world. You can check that out as well after this video. But basically, right, what I wanted to see, okay, or what the concept that has 79% success rate is basically, right, we mark on previous candles high and low, okay, and there's a 79% chance that we are going to reach for either previous candles low or previous candles high, right? And this is on the weekly time frame. So every time I've drawn a line, this is basically where we've just breached either previous candles low, previous candles high. Anytime I've drawn the orange, which is basically where we didn't sweep either, okay, so you can clearly see this candle didn't sweep the high or the low, or I would have drawn on the red lines, which basically means we swept both high and low. So I ended up tallying them, right? I did it in a bit of an old-fashioned way, but basically we have on the left, right, so tags previous candle, previous week's low, previous week's high, and you see all the things that I've checked over, right? And this is out of 100 candles. This is the amount of times we tag both, and this is the times that we tag none. So technically speaking, right, you could total the left and the right to combine these two, because obviously one of them is going to get tagged. Then if the other one does get tagged, it still actually classes under the idea that previous week's high or low did get tagged. So technically speaking, you join these together and you'll get an even better percentage. But if we just go off, right, the left one, so sorry, it's actually a 78% chance instead of 79. Basically what we do is we come to the conclusion that 79 or 78 times out of 100 we go ahead and we reach for previous candles high or previous candles low in terms of a weekly time frame. So what I'd tell you to go and do is basically go in your charts and just test this out. Do this. You can do this on any pair. You might want to test the pairs that you trade. Maybe you want to do NAS. Maybe you want to do gold as well. And just go through the last 100 examples and just have a look, right, if these results stick true for the pairs that you're trading, okay? So why does this idea actually give us so much confidence, right? Well, let me just break down exactly what I was looking at and how price played out, and then why this gives us so much confidence in the first place. So I basically mentioned in the outlook, right? And again, you can go and look at all this. This isn't hindsight stuff. This is literally everything that I mentioned. For me to be bullish, I wanted to see an inversion of this level to go higher. Okay, so let's just go ahead and play the first 3 days of price action. So what ends up happening, okay, is we respect this daily level, right? So this daily SIBI, right, this FEG that's bearish, we failed to close above it, right? The other key point here is using the economic calendar. So this candle here is a CPI news release, okay? So I know that typically, okay, CPI, right, is going to a lot of the time either be the distribution of the weekly candle, or it's going to be the manipulation of the distribution of the weekly candle. Sorry. So in this case, right, if I just break it down on a lower time frame, CPI actually went ahead, swept out, right, Tuesday's high, okay, and then has closed within. So based on this daily candle at this point in time, right, I posted to the Telegram, and again, you can go and check all this out. I said I'm not 100% sure where we're going from here. However, what I posted to my inner group, right, was that, or actually 100. I'm not 100% sure if I did actually post this, but basically in the back of my head, I was like, cool. If we start building order flow towards previous week's low, right, then I will go ahead and look for a trade to previous week's low, because I know, right, just based on the idea of probabilities, that there's a 78% chance, right, that we are going to trade to previous week's low or previous week's high. So I know, okay, cool. If so, based on my the expectations that I wanted to see a confident closure to the downside, okay? But the fact that we had a fairly indecisive candle, right, commonly referred to as like a doji, I was unsure whether we were definitely going lower. So basically what my game plan was that I wanted to see what London did. Preferably, I wanted to see London continue the 4-hour order flow. I'll show you what the 4-hour looked like in a minute as well. Once London gave us potential hint inside of a direction, then I was going to allow NY to potentially continue, or depending on which cycle arise or came about. That's basically what my game plan and what I would decide to do, right? So if we go to the 4-hour, okay, you can clearly see we've swept liquidity here. And again, in terms of a 4-hour, I was still unsure, right? We closed lower. Like I said, I wanted to see a firm closure. I'd prefer to see this order block really form. I mean, technically, bodies wise, we were respecting 4-hour order flow. I just wanted to see sort of this confident closure. As you can clearly see, we didn't get that, yeah? So let's let London play. Okay, I'll go one candle back. So London's played out here. Or sorry, actually, let's actually let the London candle play. So this next candle is New York, yeah? I then posted that I wanted to see potential shorts from this FEG, okay? Because London had showed us, right, cool, we've got a closure beneath this low. We've clearly got 4-hour structure, right? That we're now likely to trend lower, right, after sweeping some liquidity. And again, understanding the weekly profile, understanding the economic calendar, understanding that we have swept liquidity, Monday, Tuesday, built up liquidity, Wednesday being that CPI release that commonly is going to either be the manipulation or the distribution of the week, in this case, manipulation. We're then just looking for a continuation, right? That's the whole idea of the narrative. The other thing that has a lot of confluence here is the equal lows. And then again, the previous week's low, which we have a 79% success rate or probability that it's going to get reached for, okay? Just to couple that with another concept, we also have SMT at these highs when we look at Euro in a minute, okay? So let's go down to the 15-minute. Let me put the sessions on. So this is Asia and this is London, okay? Now I would apply my daily cycles, right? So with regards to intraday, right, and I know it looks like I've mentioned a whole ton of concepts and potentially overcomplicate it, right? If I was to put it very, very, very simply put, we're trending towards okay, the previous week's low via 4-hour order flow, and I know there's a 79% chance or 78% chance that we're going to reach a previous week's low. Therefore, after I'm confident that the manipulation has occurred, I'm looking to trade inside that direction. Very simple, yeah? That's, let's say, step one. Okay, I don't know why this is taking so long to load. Step two, again, for me, is then to look for a daily cycle. Now, often this is either going to be some sort of session liquidity that is swept out, or it's just going to be a continuation cycle, which would be a continuation from an FEG. In this case, we sweep London high, right? So my intraday qualification has been met in that sense, right? Lastly, I'm then looking for this high to get made at a specific time, which is normally for a New York reversal cycle, which would be around that sort of 1 to 2 period generally, right? So I know as well we have PPI at 130, so I'm going to wait for that in this case. So let's just play price. So you can see this is Asia, this is London, this is New York. Okay, so as you can see, 130 goes ahead, right? We've swept London into the 4-hour FEG. At this point, we've filled the 4-hour FEG, which is, again, completely fine, all good. This is one big thing as well. You don't want to be nervous as we trade higher or above the FEG. It's all about where we're closing inside of it, right? So I'm going to ruin this for a second. You can clearly see, right, that we're respecting the 4-hour FEG. And in terms of body closures, we're staying inside of this area, right? Specifically, we're actually staying within the 50%. So even though on the lower time frames, you may be thinking, oh, it's traded really deep into the FEG, there's nothing wrong with that, okay? So again, just to reiterate, we formed the bias, right? We've used like a statistical analysis in terms of previous week's low and previous week's high to understand the percentage chance that we have in trading to this level, which gives us, if you really think about it, gives you so much confidence with regards to your trade idea. Then simply put, I like to wait, like I said, for my cycle. In this case, it's going to be an NY reversal where we sweep London. After we do that, I want to see the high get made at a specific time, 1 to 2. I know we have PPI, which I've waited for. Then my entry model would simply just be a market structure shift plus FEG, right? So market structure shift, FEG, right? Very, very simple. The displacement for me is basically just sort of price tipping its hand to tell me, like, look, we're trading in line with the direction that you want to see price to go. And yeah, that's sort of like the last piece of the pie that I look for. Understanding that the entry is pretty much the least important part. Once you have all the framework behind you, then it's just a case of, okay, waiting for the displacement or waiting for bearish arrays to get disrespected and waiting for bullish rays to get disrespected and looking for bearish arrays to form, right? Exactly what we get here. So I just play this along. There's something going on with my 5-minute play at the moment. So let's just go to the 15. I don't know why this is doing this. Here we go. So for some reason the 5-minute won't play at the moment, but basically this is the 5-minute FEG. As you can see, we ran very nicely. If we go to, hold on. Okay, it's playing. This is so strange. It's very weird. Let me just get rid of this altogether. So another key thing, right, which I talk about a lot, is time-based TPs. Okay, so with NY reversal cycle, you can typically hold the trade to the end of London close, aiming for the last 30 minutes. If you see where the price ended up here, you can see at 4:30, which is this is UK time. So 4:30 is the final 30 minutes of the session. You can see we actually go ahead and reach for previous week's low. So you can see here that time lines up with price, right? If we actually go onto Euro and we look at the trade, because again, I've taken it on Euro, I just break down the logic here. Similar story. I won't go into crazy depth like I did on DXY, but basically we have a failure swing. We have a level of SMT here as well. And it was this day where I wanted to see price go ahead and reach for old highs, right? When we're bullish, we want to see price reach for old highs. When we're bearish, we want to see price reach for old lows. Very, very simple. You can see very clean equal highs being made here. 4-hour order flow being supported. Okay. And we understand also that when we're in a buy program, any run beneath an old low should act as total soup to go higher. So there's a little bit of S&T here as well, where Asia on DXY didn't actually get ran out. Okay. Whereas on EU, it did, right? So in terms of an NY reversal cycle, it actually looks a little bit cleaner on EU. You can see how we run out Asia, run out London, and this 4-hour swing low. We go ahead, get the 50-minute displacement, and yeah, my entry on Euro was the 5-minute FEG again. If you want to see my my entry screenshots and whatnot, that you can go ahead and look at that inside of the Telegram. If I then just plot my position on, I had the SL at the liquidity. So it actually came fairly close to my SL, which again is fine. Didn't need to manage the trade or anything like that. And I actually took partials, I closed the trade out a bit prematurely. Okay, realistically, I should have let it run to target for a 3.2R. I did close a bit prematurely as we went super parabolic, and yeah, I got it was around a 2.8R, right? So yeah, we just ran to target. I mean, in terms of time-based TPing, I've definitely closed too early. Realistically, you can make the argument and say, well, you would have had to sit for another hour and 15 minutes of chop to get your extra 0.4R, yes. But according to my rules, I like to stick to those time-based TPs as they are very accurate. So again, if I did close more around that 30-minute period, and to be honest, if we reached for this previous week's high, I would have just closed anyway. If we reach a major target, I'm not necessarily going to wait for the time. But you can see how nicely time does line up here. Okay, so yeah, that's pretty much the trade. And again, make sure you actually go ahead and test this concept out. Go ahead, mark out previous week's high, previous week's low, go back into your charts, do 100 candles and actually have a look. Does this concept really work? Are you getting the same numbers I'm getting? Like I said, technically it's even better than 78% or 79%. I know I keep probably saying the wrong number. But when you join the two, so like when you actually combine the fact that the ones that sweep both high and low, right, and you factor that in, because technically speaking, those at some point would have swept the high, then you get an even higher percentage, right? So if you guys do end up doing the study, then post your results in the comments. I'd love to see if you do get different results and what pair you actually did it on as well. I actually want to go ahead and do it across multiple pairs just to see if the results do differ. So yeah, hopefully you guys got a lot of value out of that, and I'll see you like the next one.